When it comes to SniperX1, right? A couple things we mentioned historically, but I'm bringing it back to the present right now. It's measuring basic momentum. So when it comes to the indicators, three type of function within one that measure in three different ways. The first method is obviously the momentum itself. The second thing is the force. Is pretty much we're trying to do the measurement of a confirmation. Oscillate. This is the F force line. It has to be above this variable lines. So that's confirming of that pressure going up, in a sense, only into the actual. In this case, I'm gonna go through real quick, and I'm gonna get into in-depth aspects of it. So anything, if the line continue to be above, and you have the red momentum going down, that's not a true confirmation max reversal. Just wait for a continuation of that same momentum. What we aim for towards is when we look at the volume, short term, long terms, it is giving you the perception of what that volume look like in that near future, right? How strong it is versus this move, right? The strongness of it. That's going to be the key aspects of what SniperX1 is. So we're going to go into three different types of approach to this, right? We have the high time frame, we have the mid-range time frame. When we're talking about high time frame, we're talking about 4 hours, daily, weekly, monthly, that kind of stuff. Intraday time frame, I think like the 1 hour, 45 minute, maybe 30 minutes, and then a short-term time frame, 15 all the way down to the 1 minute. That's considered to be short-term time frame. So understand the difference in terms of that, and understand what the indicator is supposed to be giving you. So indicator is supposed to give you momentum, right? Momentum of the actual price action. So when it comes to criteria for SniperX1, his story last week kind of touched base on this when I was doing the 30 seconds. So we're gonna do a 4 hours a daily observation, and we go down to the 1 hours. And then 15 minute would be ideal, 5 minute, and then from there we're gonna go straight down to 30 second to 1 hour to 1 minute, kind of show how fast it reacts, right? So in theory, this is the 5 minute Bitcoins, just based on the historic trend, right? Just based on the signals in itself, right? Whatever that confirmation might be, we're just randomly drawing it right now. So right here in theory is about right there somewhere. So right there is where the red lines is at. So imagine every line is considerable a opportunity for a scalp based on confirmation, that is, right? So this is right here. This is where the original start was. It's never confirmed it down, so that's going to be pretty much that signal. So you can see, while it might not look enticing or juicy enough in terms of scalping, this is scalping heavens, in my opinion. So from here to here, it's a decent move, maybe $100, $200 type of move. That's what the momentum is there for, scalping in that short range. So let's talk about the actual features. So when it comes to this feature, it's one of those features where it's not going to be presented anywhere else. In terms of that, it's based on a couple things. When it comes to this ribbon aspects, we created it for three purposes for while looking at it, right? So one thing we have to look at is the thickness of this ribbon will tell you how strong or how weak that momentum is turning, or at least heading towards, right? And the second thing is the angle of the momentum ribbons is bending. So how far is bending down, up, depends if you're talking about going up and going down, as well as the color changes, right? So we made implementation of color changes in three different ways. You have a really different colors in here. So this is going to be like a tritone, three type of tone. So you have a weakness, and you get weaker and weaker, but it does not confirm an actual reversal and a continuation, right? So it's telling you just weak at this level. It doesn't mean it's going to reverse on you, right? That is one of the feature. And then another feature is when I'm looking at this momentum, I have this rule called the 2 to 3 candle closing type of deal. So when I have this type of closing, what I want to see from this perspective, I'm having the same line right here, is I want to move this line every time it's confirming to me this next confirmation, right? So being theories, let me erase back a little bit. So whenever I'm looking at lines, I have imaginary lines on my head, right? This imagine, you can draw it. There's really perception on this one. I draw where that line confirm. That would be ideal. Like this would be the ideal, somewhere right there. Let's do it right there for a confirmation, right? So ideally, you're supposed to be doing a 90-degree angle. A 90-degree angle is exactly where that position. So you have a long line, and you have a horizontal line where that little end or the beginning of this is. This is where I measure myself. So imagine if this is my 90-degree, or half of it, to be honest. So imagine that's a 45. Right? Imagine that's a 45 half of this degree. In a short theory, right? When I'm shorting and I want to see this in continuation, I want to see every time a closing of a bar candle, whether it's a 5 minute, a 15 minute, 1 hour, doesn't really matters. The couple things I need to take a look at when it comes to momentum in itself, the ribbons, to let me know exactly if I have more potential on the downside or I'm losing that particular momentum, right? So in this theory, as you can see, this next closing bar right here, we have the same thickness and the actual ribbon is not hitting towards this. What you don't want to see from a short perspective is the actual ribbon is sitting right here or it's going back towards this line right there, horizontal. That let me know right now this is the weak momentum. Whatever that momentum is laying over here is considered to be weak. Any momentum ribbons that is beyond the 45, meaning it's heading towards this side, that is a strong momentum. So the stronger you are, the stronger the momentum ribbon is staying to this particular right line. The weaker you are is the crossing of this particular 45-degree angles, and you're heading towards this line right there. Right? That's going to be the key aspects of strong and weakness. Second part is the color variances, meaning that I want to see continuation of the red colors. I don't want to see no darkness in the color, this type of darkness, right? That's the first weakness of the darkness. That's considered to be the changes in color momentum. So they're going to give you a lighter and a dark, depending how fast you switch. It's going to give you the darkness. It's about to switch, right? About to. Not 100% of the time, it's about to. The third thing is the degree of angle this thing is measuring. So if I go right here, you see as I get down from here to here, let me zoom this up so you can see it better. I can see as I continue to go down, right? I continue to go down and down. At the first part of that trigger, the little bit of weakness is between right here and right here. You start seeing the weakness. That doesn't mean it doesn't go down anymore. We demonstrated at 30-second last week, right? This is what I don't want to see. If in theory momentum is strong, imagine your water faucet is strong, you see a continuation flow of that momentum correctly. But a curve meaning that this thing is if you just based on the imagination line, right? So from here to here, just put that line right there for a second, right? Just demonstration. You see the weakness is getting there, it's getting smaller from the left to the right, the width. So this let me know right now we still have a possible continuation of a downtrend. I won't be too keen of a strong momentum in this aspect, right? What I don't want to see further on, if I continue to short, is more curving. So where you have a curve right here, right, the first curve around this area, you have more continuation. And then now when you get to this level right here, this little bar between these two, more curving. More curving means more weakness. Now you see this flattening, and you start seeing color change between these two. From a short perspective, whether I'm shorting right here, for example, I'm just going to demonstrate. So imagine you're shorting from there and you have the previous highs, and then you start seeing this particular one. That's a scaling opportunity. Because remember, you have the first curving, right? Just scaling. Don't have to get anything crazy. And when you get to this level right here, where the switches in this momentum right here between here, this is the ideal position for a scale, another scale, completely exit the trade, move your stop loss. That is what this particular measurement is there for. So understand the difference in terms of that. And then from there, we're going to move towards the actual differences in time frames, right? Time frames. As you can see right here, when I'm looking at this particular momentum right now, right? If I measure momentum, I'm looking at this top guy right here. So basically, let's say I get, for example, I get my shot around this upper end, 70,703 for Bitcoin. Let me get a line I draw right there where supposedly the entry is at. It's right there. I said supposedly, ideally, it's right there, right? As the price continue to go up, right? I can see green, not a problem. I can see green going back up, not a problem. That first curve right there, that first curve is letting me there's some signal in weaknesses. I scale, move my stop loss and break even, right? Because just in case it hit back down on me, it's okay. This is one of those strategies where you don't scare to get your stop loss hit. Because ultimate idea of being profitable trader isn't to win every single trade. It's about reducing that risk every single trade. That's going to be the key aspects of it, right? So you're losing a lot less than you are winning. So it's going to be key. So when I start seeing more of this, that's a great sign. That's a great sign that we should be exiting and move your stop loss, right? As long as just based on momentum at this, I'm looking at this aspects. When I get up here, I do not see a curving, a true confirmation with this also. So still have a positive volume. That means you're just scaling yourself, move your stop loss, break even. Now you have more continuation, right? It doesn't confirm as a depth move. It's confirming that as that particular area have a short term down. Right? We're talking about short term here. Continuation until you get back all the way up here. Somewhere the first part that I'm really worried is this part right here. That first curving right there. And then from whatever this whole entire section right here, 1, 2, 3, 4 bar, that'll be completely scale out for me, right? Completely scale out most of it until I start seeing it starting to switch in red. Let's see how the actual F-force looks. Yeah, the F-force already be crossing around this area right there. So in theory, right, this would be a full-blown scale out, right? This would be kind of additional if you needed to. So that's how you would look at it in that perspective, right? Now, if I draw that 45-degree angle lines again, from this neighborhood right here. Let me zoom in real quick. So I do another 45-degree angle. Just imagine if I'm doing that drawing right there. Right, sorry, I gotta do another line. So right there, right? Remember the bottom. All I'm doing is measuring the bottoms and then the horizontal line where the first initiate started. And then from there, I do the 45-degree angle. You don't have to do this all the time. You just got to imagine where the 45 is at. So this is looking great. It's looking great that it's heading towards, remember, when you're taking a short, what you want to see is the ribbon is heading towards this horizontal line, right? When you are, which is in the bottom of it, when you're taking a long, you want to see this thing is heading towards the top left, right? Bottom left, top left, and stay in this quadrant of the line. This is 45-degree angle lines. You want to see the ribbon continue to stay in this angle. You want to see the ribbon continue to stay in this angle. You don't want to see no curving beyond that. From a momentum perspective, you can see right here, it's starting to cross itself. It's starting to cross up. It means alert for an actual scaling. So if I draw the whole entire 45-degree angle lines, if I stretch it further, let's say I stretch it further right there. Now you see this crossing of a continuation, right? Continuation crossing into, and you get to right here. Now everything is below. Everything is below now. Below this 45 is heading towards this area. That's an opportunity for an exit. Same thing here, right? This is an entry aspects. Where is this right here? Entry, stop loss behind it. You see, if I zoom in this momentum again, imagine my 45-degree angle, the lines right here drawn again, where they initiated. My 45-degree angle lines. Sorry, I'm going to draw this line real quick. So remember, just 45-degree angle lines. Don't have to be right. I'm just trying to see the more, the better, right? The more, the better from this perspective. While this one is still below, I wouldn't take a long because it's still haven't crossed fully and it's still continuing on this particular line. Even though it's balancing is out right now, so I'll still continue on my short. If it were to have a short, and I'm just from there, imagine my entry is right here, stop loss. When I see the first curving, that's my signal for me to start scaling, right? The first curving is about right there, right here, around this bar, whatever there is bar. You start seeing the curving around here. That'd be a scaling. If your entries up here, move your stop loss to break even. Now you have no loss in the terms of trades, right? Stop loss origin right here. Now you move a little bit further, so you can hopefully get into your entry, break even, that kind of stuff. Continue to hold your trade. I don't see anything particularly fancy about this one. Let me see up here in terms of, see the momentum. This thing is still in the bottom. That's one of the reasons why I still want to hold on to it. If this thing were to turn green and it's forced to cross back up, obviously that's going to be a full exit if it haven't taken my stop loss out. So this particular strategy, what I'm explaining to you is that every single curving is an opportunity to be cautious and for you to start scaling, right? Scaling, it could be a percentage, it could be 10%, 20% per your trades, and then move your stop loss to break even. This is why this strategy is pretty much strong in that nature. And every single, change in color lets you know that the weakness in this downtrend is starting to hopefully, going back up here, right? So that's going to be the third aspect. Here's going to be the touch base aspect. It's called the 1, 2, 3 combination from a candle perspective. Let me know how strong that is. So in theory, from a momentum perspective, I want to see a 1, 2, 3, great, right? What you don't want to see is a 1, 2, and it start getting weaker. The candle aspects will let you know strong or weakness of a continuation. If I start seeing, in this case, for example, I'm going to use this as a perfect example. So if I have a 1, right, supposedly a 2, and you start flipping already, that this is not that long I'm looking for. This is not that strong momentum I'm looking for, because in theory, 1, 2, you should see a more continuation in this aspect, right? Continuation. So imagine this were to be my lines right here from that new green. Let's say, example, this is where to be my green. Right there, that's my green, right? So this is going to be my new 45-degree angle lines that I'm about to draw right now for that new trend lines right there, right? So in theory, this should have head towards here and should have go across above it for my long, It did not. It stayed near that horizontal line, letting me know that this is a weakness in the particular up. That doesn't mean you start taking your long, right? There's a difference in terms of that. So that's going to be that combinations of the three things that I cover many videos before regarding that aspect. So now we're going to switch to a different time frame to kind of get a feel of what the time frame does and what the actual function of it. So this is where it's going to be the bread and butter of this particular strategy. So if you understand high time frame, short-term time frame, that kind of stuff, right, is really about confirmation. What in theory, that's what it is. So I'm going to turn back down all the way up to the daily. I'm not going to use the weekly because weekly is too far, right? Too far. Most of us don't even use weekly, and I don't think weekly is even suitable for any kind of trading right now. So let me turn this off. Some of this lines, I'm going to zoom back in, right? So if I zoom back in this particular lines, I want you guys to start looking at momentum in this particular way. So if you look in this aspects of momentum, remember that the higher the time frame is just more of a trend confirmation from a momentum. It does not mean it's changing any trend, right? Trend is a whole different thing. So it's a whole different subject where you start using order blocks, market pulse concept, you really get the understandings of it. But what I'm saying is this, from this particular angle right here, right? I'm talking about Bitcoin and the dailies. From this particular angle right there, 68,548 to where it's currently sitting right now, it's close to $3,000 from a momentum perspective. That the momentum is going up this way from a long-term, mid-range kind of stuff where you talk about more than a day type of move. 24-hour plus kind of move, same thing here, right? So if I copy this one, I do another one right there. You see right there that depth momentum from here, whatever that line is, the 68,600 all the way to its currently low is 66,800. So a $2,000 move. The market isn't moving that much, right? But it's telling you the directional where it's supposed to be going. So from there, we could do another one right here. So from here, check the top, 62,300. This is 72,000. That's a $10,000 move. This isn't about exactly where is it going to head towards. It's telling you the directional from the momentum perspective where it's planning to go. So if you know a directional of where that potential price action could go, that may in a short-term time frame, whether it's a 5-minute, 15-minute, 1-hour time frame that you're using, at least you can understand exactly what the foreseeable future, maybe 24-hour plus, maybe to 32-hour, maybe to a 2-day, 3-day, who knows, depending on the actual market volume, right? At least you understand that directional. Trade with trend is probably the first idea you can actually execute with this. So what I'm doing now is pretty simple. If I understand that from here to here is where the potential of the up price action from a 1-hour confirmation. This means when you're using the 1 hour, that means the max you can probably use is 24 hours. That signals whatever that confirmation is, right? 3 hours to 24 hours max. Anything beyond that, the 1 hour, is not relevant from a confirmation, right? You gotta wait for a new signal. That's what I mean. So in theory, if you think of right now, let's say example, the lowest end is 3 hours. For within 3 hours, I have opportunity for a long scalp because the long opportunity is here. So what it's gonna do? So let's say 3 hours, I'm scalping. So when I'm scalping long and I understand where that trend is going, all am I doing is looking at the same setup, right? The same setup, meaning green momentum, the F force is above, that kind of stuff, I'm taking along. Anything that was showing resembling of the opposite, I'm exiting and I wait for the same what. So that's what I'm doing right now. So let's do example. Remember, using 5 minutes. So right now, it's really not. None of this is really confirming for me. Even though we're starting to have somewhat of a confirmation in 1 hour, this really hasn't shown me any confirmation. Green, yes, I got it. Momentum is going up. It's great. Nothing is firming. So this is going to be my new line, right? My new line. So this is going to change the color to yellows is what we're going to aim for. So let's do right now. I take a long right here on the tops, right? The beauty of this strategy is that you can actually make the stop loss not in percentage, it's the nearest or the lowest lows, or maybe the lowest low of the 1 or 2 candles. I'll do this. That'd be kind of cool. So right now, what I'm doing is I understand long term, 1 hour. I'm sorry, not long term, 1 hour intradays. I'm going to scalp long. I can scalp short, but let's just demonstrate this for a time period. So I'm scalping this. I don't have a target. I don't. The reason why I don't have a target because I'm not based on percentage. I'm basing what is momentum is starting to give me this hiccup, right? So in theory, when the price get up to right here, from there, and the price is moving and I start to see the weakness here, I scale. I start to scale my position out. Scale, move my stop loss to break even. right? Remember, I get to right here, I see the weakness, right? Weakness, scale, move, stop loss to break even. This thing never turned, right? Look, it start to never form a down line. Never. Not here, only to here. So from here, I might do another line right here, show me the reversal of their particular downtrend. So from here up here, I have an opportunity to continue to hold my trade. I'm just scaling and move my stop loss break even. All I'm trying to do is minimize my losses and gain as much as possible for my scalping. So there's still more continuation. Even though there's a weakness in this momentum, I'm not looking to hold any longer. So I'm continuing to hold and hold, right? Let's go up here to, let's see, where did it really cross? About right there. That's where it crosses. So in theory, it's about here, right about there. So that's how this particular, like, you start seeing the more weakness. This is where you can become a little bit picky, right? If I start getting weakness and the price continue to move up and it's getting thinner and thinner, this thing is going to get weaker and weaker, I could just start scale as I continue to go back up, right? So I really get this confirmation. That's where it's going to be my exit, fully exit. So that's going to be scalp 1. Now, going back to what I've said before, we're not taking short, we're taking long, because the 1 hour showing, this is just one of the way. You can actually do both way, but just explain one of the way. So what I'm doing is I'm watching the same thing. I'm watching the same confirmation here, right? I want to make sure this thing is crossing back up. Yeah, it's about, technically it's about right here, but it's about right there. Let's say we take up here, just for legit type of confirmation. So right here, if the bar is this far, right, you don't have to go any further. Just keep it in the same bar. The lows or this previous low, it doesn't really matter, right? And if from there I'm observing, I'm gonna put this final crossing is about right there somewhere. Right there, that's a final crossing before an actual true like red ribbons or whatever. But the key here is that I do not like this long at all, right? From a scalping perspective. I mean, I'm in, not a problem because I'm taking all the long, but I'd be very cautious because this long is showing me, what is it showing me? A great start off, but then you start seeing the fall off in the momentum, and the continuation of this ribbon is still small. That means this momentum, it will go up. It just might not be the astronomical one that I'm looking for. So in this case, I will continue to hold until I get to about right here, right there, right? But the key is, once this thing is starting to curve itself, it's getting smaller, right? I'm starting to scale myself out, and I'm starting to move my stop loss, right? Move my stop loss, scale, scale, scale. Because remember, it's weaker, right? If the time price is up to you perception wise, you want to scale. If not, one scale here is good enough, and the final exit is here. That'd be it. So that'd be your second trade. So right there, second trade. Now I'm not taking this third trade on a downtrend. So I'm waiting for the same opportunity for me to do the opposite right now. Let's do the opposite right here, and then the opposite confirmation is right here. Right. So my entry, same thing. I'll only take it long. Using short opportunity is my opportunity for me to go up. So right here, previous low, get up here. Where's the ending? Ending is about right there, honestly. It's about right there is a final exit, right? That's a final exit. But the scaling aspect is here. When I get to up here and I start to see this major curving right here, this flattening curve is about between this, within this bar candle. The first initiation is here. It opened wide and it's starting to curve itself back in again. I'm going to zoom in. This is more, whatever in this particular bar, right? It's starting to curve. This is where the zone I'm going to start scaling. This is the final exit. I'm going to start exiting right here. Or in theory, it should be like right here when you start to see red momentum, right? But let's just put it right there. So scale, move my stop loss. Oh, sorry. When I see that first curve, move my stop loss, break even. And then I start to scale 1 right here. And then this is my final exit, whatever that's right there. Final exit. See that? That's trade number 3. Same repeated patterns. Number 4, get down here. I'm not taking a short. I'm just taking pure long. Let's say I'm getting entry right here, right? And then from there, I want to see exactly where my opportunity for a short, for an exit for action. We have the bearish diversion, and then you have the opposite reflipping. So right now, same thing. This trade number 4, right on the 5 minutes. There you go. Previous low. Previous low. If the bar is too wide, you use the end bar. But if there's the next previous low, that's good enough. We're talking about 70,292, 70,182. That's about $60 stop loss, right? It's not that much. So you can see as the price continues to move up on this particular pump up there, you start seeing the first curving at this particular level right here. This first curving right here. That first curving, whatever's in here, that's a scaling. And for me, that's a moving my stop loss. Remember, I'm not scared to lose. That's the key thing about being a trader. Don't scare for stop loss to hit because you're scalping, right? There's going to be another trade every single day, every single minute, every single hours. So my whole point when I'm scalping is that I'm trying to limit myself from losing this part. Like as much as possible, I'm trying to eliminate that. So when I'm winning, I can get more. So just think about that for a second. If your expenses are a lot smaller than your actual earnings, every single day you're making more and more because of that. You haven't done anything special. Just that's it. That's just how you would save, right? So here we go. So scaling, will my stop loss break even? There's no true confirmation for me to actually exit, right? Maybe here scale some more because I started to see it changing in color, right? But you have your stop loss there, not a problem. Continuation of hold, remember, here it goes. Scale more when you start seeing things starting to curve, right? Starting to curve, starting changing color. This is what is called, this indicator is so powerful because it's giving you different types of variance in color. You have this little darker green, dark green, and then your super dark green. Well, that's letting you from vibrant green, right? So this from here to here is my scaling. I'm scale because I start seeing it changing color, and then there's my final exit, for example. So that's gonna be right here. It's around there somewhere. I'm gonna put it right there just for fairness. So you have one scale, maybe 2, 3, and then a final scales, right? So that's trade number 4. I'm gonna go 1 or 2 more, and without going too crazy. So I want to make sure I go back and make sure I don't hit that red line yet. The red line is all the way over here. So you can see how many trades I could possibly have. Let's do it. Let's do a demonstration from viewer perspective. So right here is where the green pops up. It did confirm. It did confirm right here. So let's do this one. Small, taking all, right? So let's say example, right here is a trade. And I have my particular long right here. Somewhere. Let's say I'm taking long right there. From a demonstration. So I'll pick along about, where are you at? Right there on the top. Right, being fair. And I'll put my stop loss. Since it's pretty high on top, it's the previous low. That candle close, right? And then now I don't have a particular strategy. I don't have a particular angle. I'm just aiming straight for this. So it's going back to what I was saying before. When I have the first angle, the continuation, and then you start to see the curving already, right? The curving, whatever that curving is, right there. The curving is in this bar. I scale. Then I move my stop loss to break even. So I scale maybe 10, 20%. I make very little, maybe $1, $2. It depends on your leverage or your lot size, right? I get stopped out. Not a problem. I didn't win that much, but I didn't lose that much either. So now let's do for the next one. Let's say this one. All right, this one, same thing. I take a long somewhere here, stop loss right here. And as the price continue to move back up, I see great momentum. That first major curve right here, somewhere in between here. That's my scaling right there, right? That's my scaling. Originally, I'm not doing anything. If this is my entry, my stop loss below, this would be my stop loss right now. I move to break even. It's getting weaker. Scale, right? This would probably be my exit, right? Even though it's not true confirmation, this is not a true confirmation. But I'm just doing it right there. Actually, it's right there. So probably my exit be final is right there, right? Because based on this particular area. So you can see right there, I have one, maybe break even, maybe make a couple dollars. This is 5 win right there. So let's go back to right here. It's going to be my 6th one. Let's move to the 6th one. This one, take the same aspect right there. You see where I put that confirmation? I'll put it all up here. Somewhere up there, right there, right? Right there, move my higher. I'm just moving up there. I'm not saying I'm going to exit up there. So my first real idea of a crossing of a red momentum is right here. So I'm going to move down. Right about there. That's right there. Because why is that? Force crossing down, depth in momentum right there. Right about right there. So right here, whatever it is areas, you already know the first curving should be a scaling, right? So this thick bar right here should be your scaling because it curved right there. It curved into it. So that'd be your first scale, and this will be your final exit somewhere right there, or somewhere right there, somewhere in between. That's going to be your 6th trade in this particular area. You see right there. I'm not taking that trade. I'm taking this trade, right? Like I said before, we're taking all trades to show the resembling that it's not a bad. Well, technically it's not because it's never confirmed, so we couldn't take that, right? It's never crossed above. We're going to take this one. This is the one that's going to cross above, right here. So if you think about it, this right here is going to be my final trade of this particular signal. Final trade. Because why is that? Because this red line showing me the definite momentum that went out. That's it, right? That's as simple as that. So the previous low, or the previous bull candle, really doesn't matter, like previous low, right? From there, I'm taking my long. Taking my long, I'm just going to move it up here for a demonstration. And then from there, you start looking at these aspects. So the price continue, not a problem, right? from here, going back up here, I start to scale right here. This is going to hit my stop loss. This is probably going to hit my stop loss. Yep. Even though this one got me more, right? Got me more, but I still lost in this one. If you see the momentum reverse back up, you can still take a long from there, from here back up, because it's still confirming the same thing, but I just did that trade and I stop lost it out. We're not going to cheat our game here. Let's say we take this next one because, you know, your stop loss got hit. You see the same thing here? The curving of this nature is my scaling somewhere here, and the final exit is here. So from there, I have a total 8 trades, right? 8 trades on that 1 hour confirmation from here, whatever the initiate from here. It's a lot more than that. I just did a really quick one. It's really a lot more, right? It's up and down, up and down. It's a lot more. But you understand the point of SniperX1 is telling you that in the higher time frame or mid-range time frame, the potential likelihood of that possibly could go to. It's not guaranteed, but at least it's telling you directional. I use 30-second, right? I demonstrate 30-second back then. I scalp on 30-second. It's just a rush feeling, you know what I mean? Just really rush feeling. It's the only indicator that can actually do a 30-second on you right now, right? So it's in theory, nothing right or wrong. We did the last week, so in theory is about right there, somewhere right here when the initiation of the somewhat of a short. This isn't a right or wrong entry. It isn't a right or wrong entry, right? Really haven't analyzed anything yet. We haven't analyzed anything, so just crazy how this works. 1, 2, 3. It's not why I don't like lights. Remember, just 30-second kind of demonstrate what you're looking at. It's 1, 2, 3. We should not be curving. We should not be curving at all. So if I'm in this position where they get to 1, 2, and they start to get weakness, I just move my stop loss real quick, right? Just demonstration. Because the reason why I'm saying, because it doesn't matter what time frame you're using on, the idea and the philosophy is still the same way. If I'm doing this, right, the same setups, and I have this 45-degree angle, I do not want to see that because that's going to cue my thing. So in short, I want a short to continue to land this side, right? That's telling me how strong this is. That's the reason why taking a position, which I did take a position here, when I get to down here, I will be scaling, so I move my stop loss break even just because of that. That's how fast my 30-second would be because I don't know the future. Right? I do not know the future of the market. All I know is the momentum aspects of things. Like right here, 1, 2, you're not looking too great. You're curving on me, right? You're curving on me on this bar, and you're not moving towards this line or towards here. You're actually staying relative to this size. That means to me right now, this short for me is a risky one. So I'm still taking it, for example. Move my stop loss, scale some here, 10, 20%, lost it. Exit stop loss, right? That's going to be the key aspect. So that's why it's going to be matter to me in this nature. So this is the reason why another one right here. See how 30-second move fast? It's not going to happen when you're taking a 5 and whatever. But 30-second just demonstrates the particular markets where it's going is where is that trend is going. Right. So right now there's nothing confirming about this particular thing is going back up. So that's the reason why you don't need to take a long because there's no confirmation. Let's take example. Let's say we take somewhere here for that particular short. Right there. So let's say the previous closing somewhere up here. You don't need to do wicks. You don't have to, right? And sorry, I'm gonna delete that. So now I'm watching the same thing. How are you looking from this? Sorry, this. So right here and here, how far are you moving into that particular nature? So 45-degree angle is about right there. So you're sitting right in the middle, right? 30 seconds is really fast. Don't recommend anybody trying that, right? So I don't like the way you're starting curve, but I want you to see you. I'm sorry, this thing's not 45. This is 45, right? So let me, sorry guys, let me do a 45 correctly. So 45. So it's looking great so far, but I want to see as the next closer in 30 seconds, I want to see this thing continue to move towards here and towards here. The stronger you're moving towards this direction, is the stronger you're letting me know that this thing is strong from this down momentum. Right now, every closing, I want to see the next closing be here. If it doesn't, if it's continue flattening out, scale, move my stop loss right away. Like that's automatically. 30 seconds is different type of beast, right? You see how fast this thing is going? I do not like the way how it's just sitting there. Look at that, right there. Right, wherever that 45, you're not even working towards 45. Maybe this is a 40. Maybe I did this 45. Yeah, that's right. You're not working towards the 45 right now. I mean, you are, but you're not technically not working towards that craziness of it. So let me see if I can draw it more right on a 45. Yeah, that's a 45. Okay, so now it's a right 45. So you can see you're working towards it, but it's taking you very long to work towards this. That's a scale for me right there. If we were to do it, right? That's just really scaling for me out. Like, I'm not sure about this one. I'm going to move my stop loss to break even. I'm just not sure because in theory, 1-2 closing, you're supposed to be, I mean, this is 30-second, right? Imagine this is 30-second. You want to see this thing to be more faster heading towards here, crossing over here, than rather just floating. Because when you float like this, you're going to flip. See that flip right there? It's a scaling right here. More scaling because it's flipping right now. You're flipping on me. I'm scaling. I move my stop loss break even. I got taken out. See that? That's how I can predict using short-term time frame to kind of demonstrate to you that how fast I can react to the price action without drawing any line. There's no line, there's no lines, and there's nothing in this world that can tell you, even as fast as 30-second, like this is flipping right here. No, it doesn't. This is right. This is the golden boy angle right here that is going to flip on me. Remember, I could predict that. Not that I'm a psychic. I'm just looking at momentum. Like, well, if you have that true down momentum, you're supposed to be working on right here already, and you're supposed to be crossing this. You must be sitting over here somewhere for me to say this is a strong one, but now you're not, right? So this is what I'm saying about the 30-second is that it's just a demonstration, not really meant for trading. 5 minutes is going to give you a different type of analogy. It's the same thing on a 5 minute. Is that if you don't understand looking at this stuff, all you're looking at just green and red, like, oh, why did I take a red here and it doesn't work out? It's not as simple as that, right? It's not as really simple as that. So the last demonstration is here, guys. Just going to do the same thing. Just kind of see. I'm not going to take any long and short. I just want to show you guys exactly what this is because I can't catch it fast enough right now, doing all this line drawing. So imagine that's my line right there, right? So I'm just trying to get the picture in your head. Say if I'm doing 45, somewhere 45, I want to see you work towards the middle and towards this tops, right there, towards this, right? So in theory, this is your entry somewhere right here, and your stop loss below that bar. Or this bar or this bar. Take this bar for the fun of it. Just want to see how short this stop loss is. 71,661, 71,630. So that's a $30 or $30-ish stop loss, right? So now we're like, well, looking decent, looking very decent. This one, screw the. If you're scalping this low, screw everything. Oh, it hasn't confirmed, but it's starting to curve scale. You see, it doesn't confirm anything. It's starting to curve, which I don't like. I scale, move my stop loss, scale. Right? I just scale. That's all I'm doing. Like 10%, 20%. Like this preference point. You should not be curving. If I'm demonstrating this correctly, in theory, should make curve. I'm just scaling. I'm not done anything. Move my stop loss, just securing this aspect. And then now, every time you're working towards that line, you are working towards this line, which is great. But that curving again, right? I do not like it. Maybe do a little bit of scaling there. Not crazy. It's really having changing color for me. It just a little bit, very little bit. I'm just being sensitive. Nothing really crazy. What I don't want to see, every time a bar closes, I don't want to see you going towards this direction and heading towards down. I want to see you continue to keep this, straight path or heading towards here. The more you're heading towards here from a ribbon perspective, the more, the stronger this particular short-term trend from a momentum perspective, right? That's all it's telling me right now. So I think there's another curving somewhere. No, it's not curving. It's not curving. So right here, still no curving. So you kind of what is sitting above there, kind of pointing above right now. So it's decent, not a bad. All I'm watching, if I'm trading very short time frame, is that curve. That'd be my first scaling aspect curve right there. So we're just watching right now. I mean, it's decent. When we get into right here, 71,663. Right now, it's 71,734. So it's about $80 move right here. Oh, that curve right there. A little more curve right there. I'm gonna scale somewhere right here. It's a little curving, a little bit more of a change in the color. So just continue to scale my percentage, 10%, whatever it is might be. I'm just securing profit. Being a good trader is about learn how to secure your profit because the market gives, and you got to learn how to take it. Period. That's what it is. So right there, it's curving. Really nothing crazy. I already moved my stop loss, break even, so I have nothing to lose. Yep, that's curving. I'm exiting maybe more right here around this area. Scale more, and this thing turned red. I'm completely exiting their aspects, right? So it's just scaling right now. Just scaling maybe like 30% so far. 1 right here, 2, 3. Haven't done anything crazy, but this I was starting to tapping more scaling because I just see these things starting to curve. Starting to tap a little more scaling. Just leave my stop loss where it is. Took out my stop loss. That's it. 40% earn. Haven't lost anything.